Hi, folks. Dan Bird here with the Daily Scan. We've got a breakout. Looks like the market went the other direction and broke out above 6,100. Needs to confirm it, and we'll see if that happens tomorrow, but looked pretty impressive today. We'll take a look in a minute, but looks like we've got a breakout today. As always, I am not a financial advisor. Anything that I say is meant for educational purposes only. I'm not making recommendations to buy or sell anything, and you need to do your own research. So let's take a look at what happened. The homepage, we'll look at the market bias. It ticked up slightly. It actually looks like it's breaking out too, above these previous highs over here. So that's good news. It still could get back way up here to these highs from earlier in the year, or actually later last year. So it looks to me like that's the way it might be headed. And you can see the overall trend right now is definitely up. So the market bias looks pretty good. If we take a look at the market bias matrix, you'll see we've got more greens than reds, a couple of reds, but mostly green, more greens today. I'm going to show you what I see. This is what I look at when I update this every day. It doesn't take me very long to do it, but I'm going to show you all of these charts right here that I go through. It's going to be very fast, but you'll get a sense for the bullishness that the market looks like it's displaying. First off, here's the S&P. So there's the symmetrical triangle that I mentioned yesterday. I said it usually breaks out one way or the other, but it doesn't indicate which way. Well, now we know it's breaking to the upside. So it didn't quite get to the point. Had a couple more days to get to finish this symmetrical triangle, but it definitely broke to the upside, went above the previous resistance, but it's got one more left to go, which I'll show you in a minute, to get above the actual closing high right there. It basically just touched it today, but tomorrow for confirmation, we want to see that close above this previous high right there. But it's good news that it's breaking out of this long range that it's been in ever since beginning of December. So 2.5 months roughly. Good news. All right, I'm gonna flip through each one of these. Just watch the right-hand side. You'll get a sense for what the market looks like. This is what I look at every day. What I'm looking for is the 5, the pink line, the blue line, and the red line. Those are the 3 that I'm looking at to see if they cross. But take a look. There's the NASDAQ, broke out. There's the Dow heading higher. NASDAQ 100 broke out. S&P 100 definitely heading higher. Mid caps struggling, but trying to make a comeback. Small caps, same thing. New York Composite almost breaking out. Russell 2000, small caps, again, struggling, but trying to make a breakout. There's growth. That looks pretty good. There's value. Even value looks pretty good. There's transportation, trying to make a comeback. Utilities, same thing. Now for the sectors, technology, looking great. Communication services looking fantastic, definitely breaking out there. Discretionary coming back. Staples looking really good. It's a defensive sector, but it looks to me like everything's participating right now. There's utilities, healthcare, energy, materials, industrials, financials, real estate. There's retail, semiconductors, definitely trying to make a comeback. It's still got a lot of work to do to close up this gap right here after the DeepSeek news, but that one's moving higher. There's software. Software looks great. Clean energy, been just selling off all year. Still looks pretty bad, actually. There's artificial intelligence, new highs. Cloud coming back. Autonomous vehicles coming back. Cybersecurity, definitely making new highs. Biotech, trying to make a comeback. Home construction, really been beaten up. And that one actually has not looked that great. Even today, doesn't look that great. There's transportation. This includes airlines, things like that. Insurance, making a comeback. There's banks, regional banks. These are the relative charts. I'll skip through those real quick. Magnificent Seven versus the small caps. There's large caps, medium, mid caps, and small caps. And then we have CRB. So now we're getting into commodities. There's oil. Oil is down. There's light crude, WTIC. That's West Texas crude. Down today. This is actually interesting because the oil and gas definitely going down. There's Brent, big down day. Gasoline, big down day yesterday. Still down today. There's natural gas, black candle. Here's DBA, agriculture, still up there. Corn, soybeans, down. Cotton, making a comeback. Lumber, hanging in. Gold, great day for gold once again. Gold miners, also a great day for gold miners. Silver, same thing. Silver miners, looking great. Here's steel. Steel's making a comeback. Even with the talks about tariffs on steel, steel still looks pretty good. Copper, fantastic. Lithium making a comeback. So this one right here, this LIT is actually an ETF. So lithium actually looks like it might be on the verge of starting to really head higher. If anybody wants to play lithium using an ETF, that's one way you could do it. Here's uranium, just going sideways. Metals and mining, looking great. US dollar heading lower. So the dollar went the opposite direction of everything else today. There's Bitcoin. Bitcoin not doing too great. You would think it would keep up with the market, but it's actually not. It's actually heading the opposite direction from the market. Actually had a down day, actually gave a medium-term down signal today for Bitcoin. 10-year pulled back. So the 10-year came right back down again. And then this is bonds, 20-year bonds starting to perk up. There's the downtrend line that it needs to get above before it confirms that it might be a change of character. It's really, it needs to get back up here to the 200-day, but even above this downtrend line, closing above it with high volume, and today was high volume. That's what it needs to do. There's the 10-year, definitely above zero, pulling back today. That's the yield curve, basically. And then here's the 2-year versus 3-month. Actually, it inverted right here. And then yesterday pulled above zero, and today came right back just basically right at zero. So that's what all of them look like. That's what I go through every day. It gives me a chance to see what, in general, what the market's looking like. And all that then is reflected right here in the market bias chart. All right. I'm going to go through a couple of questions that subscribers had and some of the stocks that people were asking about. So let's take a look at, I'll do it with this one here. Let's take a look first at CRNC. Somebody asked me about CRNC. This one looked like it was starting to make a comeback, but now it's pulled back again. So it's still in that sideways channel right now. It does have a squeeze, 1, 2, 3, 4, 5, 6-day squeeze down here. And on the weekly, it's just going sideways on the weekly. So it could start to take off, but not really giving too much notice just yet. The other one was Cisco, Keltner channels for Cisco. Well, we've got the Keltners up there. So let's take a look at what Cisco looks like, and look at that. That's today, by the way. So this question came in yesterday. Today they had earnings yesterday. So there's earnings. So I think it was after the close yesterday. Today it looks like they had good earnings. Today it gapped up and then sold off. So that's a black candle. Went above the 4X. It's almost into the 5X Keltner channel right here. So very, very extreme. But because it's a black candle, especially on earnings, that means the earnings were good. That means it might trend down for a day or two before it starts to go higher again. So that's the thing to watch with these black candles, to see if it pulls back a little bit more and then turns around. You got to wait for it to turn around. What you don't want it to do is close the gap down here, back down to about 62.50. So Cisco actually looks pretty good right now. CAG and BDX, CAG That's ConAgra. These are staples. Staples as a sector had looked pretty good. This is in a downtrend. It is not breaking the downtrend right now. It pulled back. It's probably going to come up here back to the mean in the middle again and head lower. The weekly is not looking great either. So nothing really looks too good about this chart. If you're in it for dividends, then really there's no reason to do anything. But just from a chart perspective, it does not look too good. Could continue to head lower. The other one was BDX, Becton Dickinson. Also terrible after earnings right here. Looks like they missed. It dropped all the way down right there. Not quite down into the 3X yet, so it still could have more to go, more downside left in it before it pulls back up here to the mean, which is at 235. Right now it's at about 225. So, and you can see here, it's got a long squeeze for the weekly chart over here. And then it fired to the upside briefly. And then now it's firing back down to the downside. So that one does not look too good either. He asked for another one, and I didn't give me the symbol, but I think it's Con Edison. This is Con Edison. This one is making a comeback. Looks like it actually might. It needs to get above the 200-day moving average, and it's right in the middle of its range right now. So it definitely could move up to 100, close to 100. Right now it's at about 96, 95. So that one looks okay, better than the other two, actually. All right, the other question that was asked is related to TTD, and I'm going to actually go over here for this because they reported yesterday and missed, big time miss. You can see way down here, huge volume, way down here. So they were trending down over this period. And a couple of things I want to mention about this chart. So if you had been looking for a place to get in, then it would have been if it broke above the 50-day moving average, which it didn't after going below it. So you got a short-term down signal there, you got a medium-term down signal there, went below all of that, tried to get back up above the 50, got rejected, came down again. Now you've got a lower low, you've got a lower high, came back up, tried to get above the 50 again, didn't, got rejected. So now you have another lower low, another lower high, tried it again. So 3 times in a row, tries to get above the 50, and 4 times in a row, actually. Tries to get above the 50, gets rejected, and makes an even lower low. This is the definition of a downtrend. The MACD is below 0 right there. So the warning signs on this, if you had been holding through all this period back here, the first warning was the 5 crossing the 21. That's the short-term down signal. You can see that the MACD had already crossed up here. So that's when your antenna should have been up, saying something might be happening with this stock. And then the 5 crossed the 21 right there, sitting right on the 50-day. And then it dropped below the 50-day. So that's warning number 2. And then the 21 dropped below the 50. That's warning number 3. And then it couldn't hold the 50 and got rejected again right there. That's warning number 4. So warning number 4 would have been at about 122. About 122, if you didn't get out on this big red candle, which is usually where I like to probably go to cash or at least get out of half if I had been holding for a while. Right there at 131, at 122, you have 4 warnings at that point. That would have been the time to get out, and then you would have avoided all of this big, huge gap down right there. All right, and now it's way down here. So support is at about 77. It could continue down to support. It probably has some shorts in here. There were probably shorts every time it gets rejected at the 50. There were probably shorts taking positions. So you might get some short covering down here, have a brief recovery. Let's look at this is interesting. Look at the chandelier exits. I covered chandelier exits in a previous Technical Tuesday. So the green one is the bullish and the red pink area is the bearish or the short, meaning if it's above the green, then longs take a position. If it's above the red, then shorts cover, which means they buy too, so it pushes it up even more. When it gets down below the green, that's where the longs exit. So that's what this is meant to do. It is an exit strategy. So the exit right here would have been December 18th. And just out of curiosity, December 18th is exactly the same place where I said I would have exited. Right there when it dropped, when it closed below the 21 day, right there, happens to be the same day that it went below the bullish chandelier exit. Actually went below both of them. But this is the point where the shorts would start taking positions right there. So it came down and it never went back above the green. Went briefly, actually didn't really close above the green right there, and stayed below the 50 day. So all through here, it was negative through this whole period. And then of course the bottom fell out right there. So not a good look. The Keltner channel, obviously, it's like infinity X Keltner. Oops, Keltner is this one. There you go. So you get the 1x, 2x, 3x, 4x is right below the red. This is like infinity X. So it is at a very, very extreme, which is usually where it might bounce temporarily, especially if shorts start covering. So the other question that was asked is, what if I had a stop in? And of course, when something like this happens, and I've talked about this before in the past, when something like this happens, then stops are not going to help you. So if you put a stop in, you said, okay, well, looks like, that could be the bottom. The first thing I would say, well, let's talk about stops first. So put a trend line in here and say, okay, I'm going to put my stop right below the lows right here at about 112.50. All right, because that looks like it might be support. Well, you don't really know it's support because it's making lower lows. So it could easily make another lower low. If it was making higher lows, then yes, I would say it was support. In that case, as it's going up, when it's making higher lows, then yes, you put your stop under that low. And if the price moves up, you move your stop up to the next pullback, usually around the 21-day moving average. In this case, it's making lower lows and lower highs. It is confirming it's in a downtrend. All of the other things that I talked about said that it is in a downtrend. So you can't really trust that it's going to hold the stop. But let's say you put it there anyway, because you didn't want to, if you were holding all the way through this period, then you still have a positive return. You still have a profit. But if you bought it at the highs up here and watched it come down like this, and every time it comes back up, it gave you hope that maybe it was going higher, and you put a stop in just to make sure, well, when it gaps all the way down here, your stop will not help you. The stop actually won't execute if you left the stop on. And in this case, let's see where we ended. In this case, the day before, we were up here at 118. And it gapped down and opened at 85. So it went from 118 at the close. Actually, the close was way up here. So it went from 122 at the close down to 85. Your stop won't help you in that case. Your stop, the way it's designed, it's meant to execute. It turns into a market order as soon as it goes below your stop price. So your stop price was at 113, let's say, 112.50. As soon as it goes below that price, it turns it into a market order. It does not mean that it executes at the price you put it at. All it's doing is changing it to a market order. A market order says execute it at whatever the market is. And in that case, your stop gets executed down here at 85. Now, if this is something that you wanted to be in and you're a long-term holder and you don't care about all of this noise in through here, you don't care that it's making lower lows and lower highs, you don't care that it gave you 4 chances to get out back here, then what I would have done is just before earnings, remove the stop. And that way it's still going to go down. You're still going to lose this much money, but you still will have the stock. So in that case, it still will be way down here. In fact, it ended the day at 82 right there, but it's likely going to bounce higher. At least you'd be able to get out a little bit higher than that. Now, the other question sometimes is, well, what if I did a stop limit order? Would that help me? Well, in a way, it would. It would be pretty much kind of what I just explained, sort of like just removing the stop. So a stop limit, let's say you put your stop in here at 113, and you said if it goes below 110, I don't want it to sell. So you've got a stop and a limit. So the first one is at 113. It says turn it into a limit order in that case, not a market order, but a limit order. The limit order says if it's below 110, do not sell it. In this case, it was. So you would still own the stock and you still would have the chance of having it come back up and bounce a little bit, maybe get out at a little bit higher price. So a stop limit order in this case might have helped a little bit. It would have been pretty much the same as just removing the stop. But this is a great example of why earnings are a binary event. You don't know. This has been a really strong stock all through this period here. Wall Street was giving you advance warning that the big traders were starting to move out of their positions, and they can't do that all at once unless something like this happens, obviously. So they do it slowly, but they leave their footprints. Lower highs and lower lows are the footprints of what big traders on Wall Street are doing. So it was giving you fair warning right there. 1, 2, 3, and then when it got rejected here again, 4 times. So right here at 121 would have been the last chance to get out. Not the last chance, but the 4th warning, put it that way. The 4th warning that you probably should be getting out before earnings. And this was on January 22nd. So what's that, about 3 weeks before earnings? So that would have been the warning sign to get out before earnings. This is a good reason why I don't like holding into earnings. Now, earnings a lot of times can go the other way, naturally. They can actually have great earnings and gap higher, but you don't know. You never know what's going to happen. So at a minimum, maybe sell half right there and then see what happens with the rest of it. Anyway, that's my opinion on trade desk and also on what happens with stops. All right, so the next stock that I was asked about is Zeta, and I'm going to talk about Zeta, but I'm going to do it in the context of the daily scan because we've added a couple of stocks to the daily scan tonight, right at the close because the market was breaking out. So the first thing I want to say about Zeta is you'll notice down here that these are pending trades. These are trades that were in here at one point and didn't execute, mostly because either the price, the proposed entry price, in this case, XL was 36 and it never made it up to 36, or the earnings were too close. You see Upstart earnings were 2 days away. Now this one was one that it had great earnings and it gapped higher. So here Builder never hit 186. So these are ones that pending trades that never executed. You notice that Zeta is in this group, and notice the date, October 30th. So if I look at this stock, we'll look at Zeta, and right back here, this pink vertical line, that is when it hit the screen. So on the daily screen, remember I like when it goes above the 21-day moving average after it's pulling back. Right there was the entry point for Zeta. And it pulled back a little bit and then took off with earnings. So earnings were only 2 days later. Took off with earnings, and then a short Hindenburg came out with a report, and it fell way down here. All right, so Zeta is on our list right now, but not from this point. It's now on our list from, it's up here from 2/6, February the 6th. And we still, and it has not hit the stop. The stop did get moved up right to the 21-day moving average, but it never hit the stop. So it's still in there. This blue line is the original stop down here. All right, so this is actually looking pretty good. Now, what else about this when we got in back over here made this look like a good opportunity? Well, if I go back to this one and put Zeta in here, we can see that it's had a squeeze right through here. So it had a really nice daily squeeze, about almost 3 weeks worth. And then right here was the entry, right when it fired out of the squeeze, right there. That's what happened. Right now it is in the 3x, right near the 3x zone. So it certainly could pull back, go back to the mean. We'll see what happens. If the whole market continues to go higher and confirms, you notice over here on the weekly. By the way, tomorrow I'm going to just focus on weekly. So stay tuned for that. Friday will be the weekly view. But over here, it's getting a weekly momentum gain. It's about to cross the zero line. The line itself isn't crossing zero. That confirms an uptrend if it does that. But everything on the weekly actually looks pretty positive for Zeta. So that one looks pretty good. The other one that we had in here that might get stopped out tomorrow is Eris. If it stops out at 26.75, it'll be 2.7% loss. So you can see right there, it had a bad day today, sitting right above its stop. So 26.75 is at 27.09 right now. So that one could easily get stopped out tomorrow. So we might be out of that one. So the three that were added, Honest, this is, you can see that earnings are only a couple of weeks away. So we're going to need to watch these two and maybe even exit before earnings. So Honest Company, this is Jessica Alba's company, had above the 21-day today, had a really nice looking candle today, closed near its high. Even though the momentum is not above zero, it's trending higher. It came down and hit this 3 times. So there's a triple bottom right there. And the ADX line is just about to cross. It hasn't yet, but it's just about to cross. So that one actually looks pretty good. So we took a position in that today. Let's look at it over here. There's Honest, and you can see quite a few days of a squeeze, sitting right in the middle of its range. So that's that. I like that when it's right in the middle. Could head all the way back up here to the top. And the weekly is moving sideways. This might even start a squeeze over here on the weekly at some point pretty soon. So that one actually looks pretty good. You'll notice over here on Honest, the squeeze count is 10 on that. So that's got a really nice squeeze count. The next one is Laser. And this one has a squeeze count of 0. It's got earnings only 12 days away, but it hit the screen today. And you can see it had a really nice candle, really nice rally today after hitting the bottom twice, but it's higher. It's a higher high. And all through this period right here, it's created higher. Each day it's gone higher. So today it started to break out and went above the 21 and the 50, still below zero up here. So it's got a lot of work to do to really resume an uptrend, but the ADX line is moving higher. Now, if I look at that on this view here, and let's see. The other thing about Laser is it had a short squeeze alert today. So that means more than 20% of the float is short, and it satisfied all the conditions for a short squeeze, which is going up on much higher volume, having a ending near its high and going up quite a bit during the day. So that has a short squeeze alert today. Now the shorts aren't really going to feel pain until it gets up here to 850 or 9, probably 9. But if it does make it that far, and today it's at 660, but if it does make it to 9 and starts going above that, then all of these shorts in through here are going to feel a lot of pain. So they're going to start covering. That could push it up even more. We'll see. These kinds are somewhat risky because it could reverse just as quickly and go back down. But sitting right in the middle of the Keltner channels over here, and the weekly is just continually going down. So I don't like, lower lows and lower highs except for recently. So this could be the character change that we're looking for right here. It's not much of one though. And you see earnings are coming up right there pretty soon. So we've got to keep a close eye on this one. And if it does start to move pretty well, then I probably will exit before earnings, or at least get out of half before earnings. So that's laser. And then the last one is Upwork. Upwork is here. You can see two nice candles in a row right there. Big volume today, and above the 50-day moving average. The momentum, the MACD is just crossing. It's not above zero yet, so it needs to still get above that. And if I look at it on our other view, see what it looks like over here. So you can see really long squeeze, and then it came out of the squeeze for 2 days and then right back in again. So this has a really, really long daily squeeze on it. Not a weekly squeeze though, but it does have a long daily squeeze, and the ADX line is just about to cross down here. So we'll see what happens on this one. This one, if the market cooperates, this one I think should keep going up. But if not, our stops are in. So we are protected, unless it gaps, of course. But again, the gap usually is on earnings, and this one has already had earnings. So I don't think there's too much risk on this gapping down further. The other two there are, so we have to watch those, see what happens. Now, if you want to see what the scan looks like, the scan that I ran is the daily scan, the 5-day crossing the 21, and these are the stocks that came up. So just in case you have been watching any of these, there's AMBA, ARGX, American Sports actually looks interesting, except for that candle. So that's a reversing candle, so might go down. Colgate is a staples company. It's had definitely a downtrend on that one. Gannett, Green Brick Partners. This is one that's been in the top 10 before, but it's fallen out of favor. But this could be a character change on this one, just beginning over here. So this could be the first higher high and the first higher low. So it needs to get above this high to confirm that. So we'll see. So some of these, even though they hit the screen, were not necessarily ones that I wanted to entertain. Honest Company was one that looked interesting. Jackson Financial could be a character change on that. Here's Monster Beverage. It's had a long downtrend. So it looks like it's starting to move back higher now. Micron hit the scan today. Micron is really sloppy, very sloppy chart on Micron. Huge weekly squeeze though. So this squeeze on the weekly chart could send it higher, but you don't know if the squeeze is going to fire long or short. But this is one you just have to watch. It's just beginning to move higher on the MACD, and you've got a higher high and a higher low, a higher high and a higher low. You can do the same thing with the MACD as you can with the price. So this could be a character change on Micron. What else? Anything else here looks interesting? SoundHound. This was a AI play. This is where DeepSeek happened right through here. So it's just been going sideways, just starting into a squeeze right now on the daily chart. So this one might be at a good place, maybe to take a little nibble on this one. Still has a lot of work. I mean, there's still some things on here that indicate it may not actually go up. I'd like to see it actually take out these highs. I'd actually like to see it make a higher high, because this right now is a lower high. So I don't like that. So it needs to get above probably above 17 before it's viable. What else we got over here? There's Upwork, WGS gained 26%, 2,600% last year, and then fell out of favor, and now pulled back to the mean, below the mean, actually went down to the 2x area, and now it's back to the mean. So this one might be recovering. It's just starting a weekly squeeze over here also. So this one might be just beginning a recovery and getting ready to move higher. One last scan that I'll show you, and this is what I call the daily scan. This is the weekly squeeze with the ADX. There's usually not too many. So there's just 3 on here. iRobot is one. You can see right here, the momentum is just right across 0. It's got a long weekly squeeze over here. So this one right here might actually be an interesting one to take a look at. RSI, Rush Street has been really great. It's been in the top 10 for quite a while. It's kind of going sideways here. It's got a long daily squeeze. It's had it before. Long daily squeeze, and looks like it's about to break out. So this is actually at the breakout point right now. If it breaks out above those highs, above 16, then it probably will continue higher. And then Serve Robotics, another robot company. So this one, let me see something here. All right, I just want to see what the industry group is. Electronic equipment. Again, this is right at the breakout point. So 23, if it goes above 23, it's breaking out down here on momentum after a daily squeeze. So that is firing. That's a squeeze that's firing right now. So that one actually looks pretty interesting. RSI is in the discretionary gaming space, and iRobot is in discretionary, interesting, durable goods. iRobot, it's a vacuum cleaner. I guess that makes sense. All right, so those are what those look like. If we look at the dashboard real quick, equities did great. The VIX is continuing to fall. So the VIX looks like the VIX has been our big indicator for what was about to happen. All of the sectors are positive over here. There's HIMS, second of the top 10 out of about 300 or so stocks. Corsair Gaming looks pretty good. That looks like they reported. They had a great day today. HIMS had a fantastic day today. Bros gapped up, little black candle. APP, also a black candle. So all of these had a really good day. They're Serve, Lemonade, trying to recover. If you look at the worst ones, Quantum Corporation is the worst stock of the day. Datadog reported, looks like they missed. One back. See what we've got. There's Upstart. There, that is a reversing candle. Looks like a failed breakout. Reddit missed their earnings today as well. So that's heading down. And one more back. Brinker have been doing really well. Now it's not doing so great. Looks like it's closing the gap right there on Brinker. United Airlines pulling back. American Airlines pulling back. There's Aris. Now it's in the third from the worst group. So that one I think will probably get stopped out tomorrow. So that's what those look like. So let's take a look real quick. One last thing of these industry groups over here. Find one that looks pretty good. US Mobile Telecom. This one right here. So this is the top 10. And I just like to look for the ones that are typically in growth areas. So Brewers is not really a growth area, even though it's at the top. Metals, automobiles we looked at yesterday, gambling we looked at yesterday. But let's take a look at mobile telecom. This one down here, it's number 9 on the top 10 list. If I go to the website, go to the charts page, sorry, and go down here to mobile telecom right here and click on this little box. I just added this. These are the top 10. So Iridium Communications is number 1, and AST Space Mobile, number 2. I had a subscriber ask about this. I think I covered this on a previous video. So it's number 2 on the list today. This is based on percent change for the day. If we do it by technical ranking score, ASTS is number 3 of all of these in technical ranking. So that's a way you can find good stocks. First, take a look and see which industry groups are doing well. And you can do that by setting up a dashboard if you have stock charts. Or you can look at the website if you're a subscriber. These are the ones that are in the top 10 for last week. And then just click on the little box now that I've just added, and it gives you all of the stocks in that group. And just one quick look at the portfolios page. This is for long-term investors. This still has not changed. It's bullish across the board. So the primary trend is the weekly trend. This is a long-term trend. It is long. It's been long since November 3rd of 23, and it has not changed. It actually went up a little bit today. And if you're using the triple or the double leveraged, these are the ones to choose from down here, long, double, and triples. You'd have an 86% gain on the double and a 130, almost 130% gain on the triple so far. And this gets updated every single day. You can see the date right there of the update. And if we look at the weekly chart, you'll see that it's got a green bar and it's staying above all the moving average lines, continuing to move higher. So this one looks really good. And it really is not giving any kind of signal that it's rolling over. Even the shorter term, the daily is bullish across the board. And this one too has a green. There's right at total resistance right there. It'll be at all-time new highs if it breaks out of that tomorrow. So this doesn't get a down signal until it closes below the 21-day moving average, like right there it did. I'm only putting up signals, potential areas where you can add to or enter a position if you missed the long-term signal, the one on the top, that's the primary trend. So if you're halfway through that trend and you want to still get in, then the daily one will give you the signals of where to get in. But right now, this is looking fantastic. The whole market looks really bullish. So we'll see what happens tomorrow. Hope you have a great evening. And tomorrow I'll be focusing on weeklies. So I'll talk to you then. Thanks, everyone, and have a nice evening. Be sure to like and subscribe if you want to keep this YouTube channel going. Thank you.